Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and happy Friday to you guys. It's February 3rd. We got the big jobs day today, so we'll jump right into it. So the big one we've been looking for, this non-farm payrolls for the month of January. So previous month in December, we had 157,000 new jobs created. We did have a revision for the last 2 months. So it was actually both months were revised lower by 39,000 by 39,000 jobs. So obviously, that's not great news. Forecast was supposed to be 197,000 for the month of January. It came at 227,000. So obviously a very good number there. But when you take into account that you lost jobs or revised lower for the previous 2 months, it's almost obviously brings us down to a much lower level here. So also on the other hand, we got the unemployment rate. We came in at previous month at 4.7. We expected that to continue, but it came up to 4.8%. And a lot of that is due to more people coming into the market that were sitting on the sidelines. So we're starting to see, the U6 number going up. We saw, which is the people who are working part-time or people who can work but are not working that want to work a full-time job. Even that went up a little bit. So we're starting to see more people who are on the sidelines or are coming back into the marketplace and trying to work here, which is the reason why we saw a higher unemployment rate number here. We also got average hourly earnings. We had a 0.2%, which was higher. The previous number we had was like 0.4%, and they cut it down to 0.2% in December. Forecast for January was at 0.3%, and it came in a pretty kind of anemic number here at 0.1%. So a little disappointing right there. We got ISM non-manufacturing, also known as the services industry. So this is kind of a gauge as to how the services industry is doing. And we had a 57.2%. So anything above 50% on this index lets us know that we're expanding. And we're supposed to show that basically same number from December to January. And it dipped a little bit down to 56.5%. So we had a little bit of a drop on the services industry here. And last but not least, we got the factory orders. So we had back in November, we had a negative. It pulled back, it dropped 2.3%. So December was supposed to go up 0.5%, and we exceeded that to 1.3%. So overall, not bad numbers. We had some good ones, like obviously the non-farm payrolls. But when you take into account the revisions of the previous 2 months, and then you got the factory orders, those would be good. But unfortunately, you got others that kind of the back end of it's not as rosy as it may look. Stock market's up though. Stock market's still taking that into account. They are liking what they see. Another thing that's really kind of rallying, especially on the S&P 500, is the financial industry. They're up probably the most today because there's talk that Trump might be coming in and removing some of the regulations from the financial industry. Especially with the rising interest rate environment, they make a lot more profit during those time periods when rates go up. So this is coming at a good time for that financial services industry. So the stock market is obviously liking that as well, as that was part of the campaign that he was going to help reduce regulations a bit. So let's see how this is playing on the bond market. You would think what the stock market is doing, we would typically have the bond market would be down, but today, because we had the revisions of the stock market, revisions of those job numbers and stuff, that kind of helped out the bond market. So what happened is money's coming out of the 10-year Treasury. That's dropped. The yields on the 10-year Treasury dropped, and that money's now going into the bond market. And as you can see, here's the 50-day moving average. It's been really tough on us. We're exceeding that rate now. So I'd be very cautious because obviously this whole week basically we've dropped. So wherever we were at a high or a low. We came back to right in that middle. So let's see if, and basically stayed just above or around that 10-day moving average. So let's see if we can maintain this or not throughout the day. Again, we kind of also got to see even next week if we do maintain it and see it next week. Next week we can start above and rise above and continue above that, get that trend line going upwards. Obviously that would be good news. But so far, the 50-day moving average is something we got to really keep an eye on, as it has pushed us down every single time for a while. As you can see, here's the 50-day moving average. We've kind of kept it down below it. We get up, we're down. We get up, we're down. We got knocked down pretty quickly. So just be a little cautious going in here. But today we do got better interest rates. Interest rates are better. We're up about, we were at 1.35. Right now we're about 25 basis points higher than where we left off yesterday. So that does translate to a little better pricing today. All right, folks. So I hope you guys have a great weekend. But if you guys want to get current more news throughout the day after the video, you can find me on Twitter. I do post updates throughout the day, including the market close on Twitter, my Twitter account at Mike Bjork. All right, folks, have a wonderful weekend. We'll see you guys on Monday, and enjoy the Super Bowl on Sunday too. All right, take care.